of a financial interest in a bank. If you can't answer these questions, you don't have the courage and you don't have the independence.
I agree with you on independence.
Professor, what's a sock puppet?
I heard the reference from Senator Warren.
Yeah,
earlier.
what is it?
I'm not sure I know.
Okay.
I think it's that thing you stick your hand in.
Yeah, kind of like this.
Yes.
What's a human sock puppet? Isn't a human sock puppet somebody who'll do what somebody else tells them to do?
I think that's what the senator was trying to suggest. I think that was the innuendo.
Are you going to be the president's human sock puppet?
Senator, absolutely not.
Are you going to be anybody's human sock puppet?
No, I'm honored the president nominated me for the position, and I'll be an independent actor if confirmed as chairman of the Federal Reserve.
My friend,
So I'm not burning my time on something
I
that I thought
understand.
felt like a cheap shot to say he's out of compliance when in fact he's not.
Yeah, and core PCE inflation has been running at about 3%, a full point above that Fed target, correct?
Yes.
And so some Federal Reserve officials have said that this excess is due to tariffs. Do you agree with that?
Senator, I don't. If I can make 2 points, much as we discussed in your office, I think the data that's being used to judge inflation is quite imperfect data. And among the projects that the economics profession, and if I'm confirmed as chairman of the Fed needs to do, is to try to use our new understanding and new data sources to see what's really the inflation rate in the economy. We used to use core PCE, core measures, so we'd exclude food and energy because it was sort of a rough swag as to what was going on. We don't have to do a rough swag anymore. What I'm most interested in is what's the underlying inflation rate, not what's the one-time change in prices because of a change in geopolitics or a change in beef, but what's the underlying generalized change in prices in the economy. And my broad sense is that these inflation risks and the inflation damage the last several years is improving somewhat. It has improved somewhat in the last year.
CEO of Nevada's Fair Housing at that time, who I worked with, repeatedly.
In a market economy, prices change all the time, and I don't want to be confused by that. I want to know what inflation really is, and I still think there's some work to do.
Objection. I will note, however, that what has been clearly articulated,
and AI is quickly becoming at something like escape velocity, it's important to revisit the Fed's models and see whether this innovation cycle, while it could have over time improvements in the price level and make the Fed's job on inflation easier, there's a question about what that means for employment, which is another part of the Fed's mandate. So I think that's part and parcel of what my background and suggestion and history would suggest. But if I can make one other point, what the Fed needs is a reform to its frameworks and reforms to its communications. I've seen what the Fed's done well, and often I'll give them one cheer or two, but now more than ever, the Federal Reserve needs 3 cheers, and that's what I hope to deliver.
This in your commentary, the point of the Fed's mission creep over the years. If you think about what the Fed has done.
The reason why I prefer monetary policy to use interest rates as the dominant force is interest rates affect a far broader cross-section of the economy. Interest rates get in the cracks. If we were to cut rates, then broader number of people will benefit from it. But the job of the central bank is to try to mitigate those risks in advance, to buy insurance so that we don't go from shock to shock, from boom to bust. And so my criticism is more about the conduct of monetary policy and regulatory policy in normal times. And that's the area that are in need of reform. We have a window where the economy is improving, but I would say more improvement is still possible. And it's during this policy that we need to look introspectively, look fundamentally at reform. So when there is another risk, there is another shock, the central bank is prepared to address it with less harm to the real economy.
Thank
you, Senator, what I said to several of your colleagues.
So you did not. You right now, under sworn testimony, are saying just right now that the President of the United States in that job interview did not ask you to cut interest rates.
The president never asked me to commit to interest rate cuts at any particular meeting over the period of my tenure at the Fed. He didn't ask for it. He didn't demand it. He didn't require it. And nor would I have ever done so.
We're worried about your independence. And now we're hearing direct contradictions, whether or not you were directly asked by the president to cut interest rates. And you're saying no, and he's saying yes. So there's definitely right now a true question about who is lying here. It's either you or it's the president. I yield back.
Senator, if I might respond.
Certainly.
Thank you. I take my responsibility to be an independent leader of the Federal Reserve very seriously, if confirmed by this body. I take the integrity of the office and my personal integrity very seriously. And I stand by every word I said. The president never asked me to commit to any such thing, nor would I ever do so.
Mr. Banks, this hearing is adjourned.
Thank you.
Thank you, sir.